Hello everyone. So this is the objective test questions from section A for financial management, and these questions I have taken from the Kaplan Revision Kit. So what I'm going to do is I'm going to solve these questions, right? This you can try it on your own also. So through these questions you can understand, you can gain the knowledge part of financial management, right? By doing questions. I'm not going to explain, I'm not going to explain from the textbook. Rather, I thought it's better to explain each chapter or each topic, right, through the questions. I will be doing other questions, section B and section C questions also, but first I'll be finishing all the section A questions, which are your objective test questions. So we are starting with financial management function. This is your section A. There are 7 sections in financial management, and the first section is financial management function, section A of your textbook. So I'm going to start with this. Under this, there are 19 questions, and I'm going to solve all the 19 questions now, right? So the first question is, this is how your questions will appear in the exam, right? The only difference is it will be in a CBE platform. So you have to be able to click the right answer out of 4 options. You have to drag and drop, right? There might be more than one answers which is possible. So first question is, in relation to the financial management of a company, which of the following provides the best definition of a firm's primary financial objective, right? So the firm's primary financial objective, let's read it. A, long-term growth in earnings. B, annual dividends, maximize annual dividends. C, maximize wealth of shareholders. D, maximize level of annual profits. All these are the primary, all these are financial objectives, you could say, right? Financial objectives of a firm, but they are asking what is the primary. So the keyword here is this primary, right? That means only one you have to select. Out of this 4, you have to select only one, which is primary. So the primary is C. Yes, right? Let me highlight it. So C is the right answer. That is the primary financial objective. Everything, whatever you study under financial management, is based on this one single objective, one single principle. That is, whatever you do at the end, the ultimate result has to increase the wealth of the shareholders, ordinary shareholders. Your financial management is based on this principle. There are other objectives also financial, but the main primary is this one, maximization of wealth. Even in AFM, I have been telling this, that this is the primary financial objective. Now let's go to do. Indicate by clicking in the relevant boxes, right, whether the financial objectives are financial or non-financial objectives of a company. Now, this could be quite tricky because sometimes what looks like financial is actually not financial. So that's why you have to know it. Okay, let's see. Maximization of market share. Is it financial or non-financial? Maximization of market share. This looks like it's financial, right? Most of you would go and click it's financial. But if you say that it's financial, it's wrong. That's a wrong answer. Because maximization of market share, they didn't give you a percentage. They didn't say that there's a growth. They just told maximization of market share. Maximization of market share is it's not financial, right? It is non-financial. So I will click here. I have to, okay, they just told, okay, no, I will just remove it. We'll put bullet under that, right? Yes. So it is non-financial. Earnings growth. Earnings growth is financial. Whenever some growth is there, it is always financial. Here, sales revenue growth is also financial, right? Achieving a target level of customer satisfaction. Customer satisfaction, you cannot say, right? 10%, 20%. Customer satisfaction is a non-financial measure. They could be happy, they could be sad, they could be very happy, right? It's hard to quantify. Achieving a target level of return, target level of return on capital employed, it is financial. So you see that even though this is easy, it is tough. Achieving a market share is a relative measure, or a customer satisfaction is a qualitative measure. So they are non-financial objective. Now let's go to 3. Which 3? Now you have to pick 3 of the following are the main types of decision of facing financial manager in a company, right? There are only 3 decisions. One is investment decisions. One is dividend decision. And one is financing decision. These 3 are the main types of decision which the financial manager is facing in a company, right? Now let's see why others are not, right? Appraisal decisions, okay, these are subdivisions of the investment decision, and budget decisions will be performed by the management accountants. Budget decision is not something which is performed by the financial manager, it is by the management accountants, right? And income decisions are really, they are the subdivisions of the investment decisions. Investment decision, yes. So financial management, what do? They aim to ensure that the money is available to finance profitable projects and to select those projects that the company should undertake. Once profits have been made, the decision then needs to be made about how much to distribute to the owners and how much to reinvest for the future. Therefore, investment, dividend, financing decision. Now let's go to the 4th one. Which 2 of the following are examples of financial objective that a company might choose to pursue? 2. They're asking for 2. And financial objectives, right? So the important thing is here it's 2 and financial objectives, right? Dealing honestly and fairly with customers on all occasions, non-financial. Providing a good working conditions, non-financial. Earning above a particular level of return on capital employed, yes, this is a financial objective. C. D is environmentally developing environmentally friendly, no. Restricting the level of gearing to below a specified target, yes. So this 2 are the financial objectives. Is easy, okay? Some MCQs are easy to pick up, you can clearly say, but some are little tough, it's a little tricky, right? Now let's go to the 5th one. So value for money is an important objective for the non-profit organizations. Now we are in the where, now we are in the non-profit organization scenario, and value for money. So which of the following actions is consistent with increasing value for money, right? Using a cheaper source of goods and thereby decreasing the quality of not-for-profit organization services. It cannot be decreasing the quality, no, it's out. Always read the options in order. Even if you know the answer, still you read the, okay, sometimes you know what is the answer, but still you need to read one by one. You need to read all and eliminate the wrong ones to confirm that whatever your answer is, it's right. Because sometimes the wordings are in such a way that all 4 might look right. So you need to read. Okay. Searching for ways to diversify the finance of the not-for-profit organization. You only need to select one, right? Searching for ways to diversify the finance. No, finance is not something for not-for-profit organization. It does not. Let's read C. Decreasing waste in the provision of a service. Yes, C looks like a correct answer, but without reading D, don't say that C is correct. Okay, you need to read all the 4, Then you need to decide which one is right. D is focusing on meeting the financial objectives of a not-for-profit organization. So it seems like the C is the right answer. Decreasing waste. Right? Decreasing waste is the right answer. Value for money. Okay. Why C is correct? Because value, I'm just reading a theory part as a bit, so that with the answer you know a little bit background of it also, which will help you to study later on. So value for money relates to economy. Okay. Economy, effectiveness, and efficiency. Right? And economy relates to what? Economy relates to keeping costs down without sacrificing quality. You can see part the A. Okay, yeah, A. So they are saying, okay, that's correct. Using cheaper source of goods is right, but the second statement made it wrong. Decreasing the quality. You cannot decrease the quality. You cannot sacrifice on the quality if you keep the cost down. So that is economy. So A is not correct. Then let's go to efficiency. Right? Efficiency is about effective resource utilization, such as decreasing waste levels. Yes, that's why C is correct, because we are reducing waste. And effectiveness relates to the overall objective of the organization being achieved. Overall objective being achieved. When you read D, D is just saying on financial objectives. It's wrong. They're just focusing on finance. They are saying overall objective needs to be achieved. That is effectiveness. Right? So now let's go to C. Which of the following is least likely to fall within financial management? Least likely to fall within financial management. Least. Okay. Dividend payment to shareholders increased. No. Because financial management includes what? Dividend decision. Funds are raised to finance an investment project. No. It is most likely. Why? Because fund is for which investment is which decision does it fall into? Financing decision. Right? And then surplus assets are sold off. And finally the D. It looks like C is could be correct, but let's read D. Non-executive directors are appointed to the remuneration committee. So the right answer is D, because all the others are common in the role of a financial manager. They are the role of financial manager. They are common. So D is the right answer. 7. Right? Indicate by clicking in the relevant box whether following statements are true or false. So, okay, financial management is concerned with long-term raising of finance and allocation of control of resources. It's true. Okay. Management accountant is concerned with providing information for more day-to-day function of control and decision making. It is again true. You should know all this. What is the role of financial management, the management accountant, and the financial accountant? The difference between these three you should know. So, financial accounting is concerned with providing information about the historical results of past plans and decisions, right? Financial accounting, making balance sheets, income statement, all this. So, all the three statements are true in this case. Now, let's go to 8. Which of the following tasks would typically be carried out by a member of a financial management team? Right? So, evaluating proposed expansion plans. Looks like A is correct, but still we'll read the remaining ones. Never read just one, right? Yes, A might be correct. A is correct, right? A might be correct, but does not mean that you should not read the other statements. Because once you read the other statements, you will be more confirmed about your decision. You know that this is the right one. But if you don't read, maybe B might be more correct. When you read to C, it might be even better. So you don't know. So read all 4. A, evaluating proposed expansion plans. Yes, it looks like it is one of the tasks. B, review of overtime spending. No, this is the work of financial management. Management accountant. C, depreciation of non-current assets. No, it is the financial accountant. D, apportioning overhead to cost units. No, again this is management accountant. So A is the right answer. This is why you need to learn overall syllabus, because if you don't, it will be hard for you to pick the right answer. You need to know why something is wrong. That means you need to know about those parts as well, right? Now let's go to 9. Okay, so which two of the following are examples of internal stakeholders in a firm? You should know what are the types of stakeholders: internal, connected, and external, right? So internal stakeholders, the one who are inside the organization. Company directors, yes. Customers, no. Suppliers, no. Employees, yes. Finance providers, no. So it is company directors and employees, A and D, right? B, C, and E, they are connected stakeholders. Now let's go to 10. What is the main purpose of corporate governance? A, to separate ownership and management and control of organizations, no. B, to maximize shareholder value. Okay, we'll read next. C, to facilitate effective management of organizations and make organizations more visibly accountable to wider range of stakeholders. D, to ensure regulatory framework are adhered to. C is the right answer. Now let's read 11. Okay. So 11 is, the agency problem is a driving force behind the growing importance attached to sound corporate governance. In this context, who are the agents? Customer, shareholder, manager, auditor. It is manager. Right? Now, let's read 12. Which two of the following statements are correct? Maximizing market share is an example of financial objective. No, we have earlier saw in question 2 that maximizing market share is not a financial objective. So that's not correct. 2, right? Shareholder wealth maximization is the primary financial objective of a company listed on a stock exchange. Yes. 3, financial objective should be quantitative so that the achievement can be measured. Yes. 2 and 3 looks correct. Let's read 4. The 3 is used in performance measure to assess value of money in for not-for-profit organizations. The 3 stands for economic efficiency and environment. No, it stands for economic efficiency and effectiveness. So 2 and 3 are correct. Right? Let's go to 13. Which two of the following are efficiency targets that are not for not-profit organization might put in place? Now you should need to know what are the effectiveness, what are the efficiency, and what are the economic target. Then only you will be able to say out of this 4 which two are the efficiency target, right? So reduction of wastage of a paper, it is an efficiency target. Yes. Pay rates for staff at an appropriate level of qualification, it is not an efficiency target. It is not an efficiency target. Then what is it? It is an economic target, right? Staff utilization, yes, it is an efficiency target. Once again, customer satisfaction rating, customer satisfaction rating is not an efficiency target, right? It is an effectiveness target, because efficiency targets means you are making an efficient use of the resources which are available. That means you are utilizing the staff, so staff utilization, and also you are reducing waste. So those two are efficiency target. 14. Managerial reward schemes should help managers take decisions that are consistent with the objective of shareholders. Which three of the following are the characteristics of a carefully designed remuneration package? Okay, so linking of rewards to changes in shareholder wealth, yes. Matching of managers' time horizons to shareholders' time horizon, yes. Possibility of manipulation by managers, no. Encouragement for managers to adopt the same attitudes to risk as shareholders, yes. Motivational to primarily achieve short-term goals. So it's A, B, and D are the right answer. Now, Let's read to 15. You have to say, is it a criticism or not? Okay, so indicate by clicking the relevant words which of the following are typical criticisms of executive share option schemes. When directors exercise their options, they tend to sell shares almost immediately to cash in on their profits. Yes, it is a criticism. If the share price falls when options has been awarded and the options have no value, they cannot act as an incentive. Yes, when share price falls, even when you exercise the option, it has no incentive. Directors may distort the reported profits to protect the share price and the value of their share options. Yes, it is. So all three are criticism. Now let's go to 16. The directors of Portio PLC have recently engaged a firm of consultants to negotiate standard terms of trade for one of its strategic business units. This includes the agreement by Portico PLC to pay a 5% penalty on any late invoice settlement. The policy is an illustration of the company's concerns for which stakeholder? Lender, supplier, customer, trade unions. It is about invoice. So it is none other than the supplier, right? Because invoices are received from suppliers, not any of the other three stakeholders. 17. Under the terms of UK Corporate Governance Code, what are the only type of directors permitted to sit on a company's audit board? Independent non-executive directors, executive directors with financial experience. So it is independent non-executive directors, right? Now, 18. Which of the following would you expect to be the responsibility for financial management? Producing annual accounts? No, it is of the financial accountant, not financial management. Producing monthly management accounts? No, it is for management accountant's responsibility. Advising on investment in non-current assets? Yes, it's an investment decision, right? And D, deciding pay rates for staff? No, that is also management accountant. So C is the right answer because it's an investment decision, which is the responsibility of the financial management, right? Now let's go to 19. This is the last question. Indicate by clicking the relevant box whether statements are true or false, right? Value for money is usually taken to mean economic efficiency and engagement. False. Come dividend means the buyer of the share is entitled to receive dividend shortly to be paid. It is true. The dividend payout ratio compares the dividend per share with the market price per share. It is false. And for agency problem is the shareholder wealth is not being maximized. True. So it's false, true, false, true. These are the statements. Right? Let me tell you why. So the value for money, right? It's economic efficiency and effectiveness, not engagement. That's why it's false, right? And the dividend payout ratio compares the dividend to the profit before the dividend. That's why it's false, right? So that's it for this. We have successfully finished all the section A questions from financial management function. So once you go through this chapter, you shall be able to finish this. Next we have is financial management environment questions that comes under section B, right? So don't forget to subscribe to my channel and don't forget to watch my next video. Hope you like this video and don't forget to share this with your friends. Thank you.